Today, if you see most young people, so they don't have aspirational jobs anymore.
Right.
They have an aspirational lifestyle. They want to aspire to retire early, live a certain life after retirement. So that shift we've seen happen with the young. Disciplined investor, you're doing rupee cost averages, you're buying SIPs, you're buying at dips, then you are a clean winner. So today the world is open, right? So there's a huge shift in how people are investing, and they understand the value of diversifying over geography. People are interested now in setting up these goals, having these milestones, and then saving accordingly. Passive is the way to go for a lot of young
Market cap investing.
Yes, market cap investing. And I think ETFs has also gone innovative on product design.
Mira Asset Investment Managers presents a new conversational series, Let's Tech, Tech with an X.
Hello everyone. Welcome to another episode of Let's Tech. Today it's an incredibly special episode for us as we are joined by Amrita Sirohia, co-founder and MD of INDmoney. Amrita, welcome to Let's Tech.
Thank you.
And as you know, Let's Tech as a platform, we interview the CDOs and CXOs behind the digital setups. And I'm going to open it up right there. What made you come to a personal finance experience site which you've built with your partners? What was that initial thought?
So I think when I was working at HSBC, so obviously I've always done wealth management as in my past career experiences. And the one thing I realized whether I was when I was in college, and I used to see some of my friends who were much more affluent, richer. And I used to wonder what is their dads doing that my dad isn't. So I think there was a huge gap and which between the rich and the middle class. The rich had a lot of access to analytics, data, advisory, products, which I think the middle class didn't have any access to. And I think the same thing was true even when I was in HSBC. You know, you have a lot of private banking set up, premier banking, all of these. They come with a minimum ticket size. You need to have 6 crore to get access to a complete family office,
right,
which will guide you in taxes, which will tell you how your cash flow should be, which will tell you what is working in your portfolio, what is not, what products is right for you. And then INDmoney basically was an opportunity to really to democratize this, to make it public for all, because technology can do that.
Right.
Because, and that's what we do. So now if you see within seconds, you can aggregate your portfolios across banks, across brokers. You can get insights on what is working, what is not across products. You are able to access tax. You're able to access everything, all of this, which was limited to the rich, is now democratized. So that's what was exciting about building this product.
You know, in everybody's life, there is that one milestone moment which triggers us to move ahead and do something differently. Like you said, that while you're growing up, you could see that divide, and that probably made you think in terms of doing it. But in terms of building a technology solution and doing it, there are more insights on, what are the behaviors of people, how they are accessing, what they want. And surely COVID would have helped in that journey. But that initial phase when you started, that let's get into this.
Yeah.
How challenging was that?
So you're bang on. If you look at it, this entire product is basically built on consumer learning.
Yeah.
Right? What we learn is that users don't like juggling between apps. They want everything on, and financial products are all interlinked, right? You need to make your card payments. You need to know your bank balances. You need to then make some investments with your savings. You want to take a loan. You want to insure your car, your house, your life. All these are interconnected, right? So what we learned was that users don't like juggling between apps. If one app can give them a holistic solution where they can completely analyze what's going on within not just their lives, the entire family, and then also set goals, use the cash flows designed accordingly to then use the savings and invest. And at the same time, so this is what we learned, and that's how we converted this into a product idea. The other thing is, people now, the younger generation especially, they like transparency. They like, tell us what the costs are, tell us, they like efficiency, right? They want that if it's a routine task, like paying credit card bills or UPI or routine SIPs, etc., then they don't want assistance. They want a tech which is efficient, which is fast, which is good, for their routine task. But at the same time, for complex products like investing ideas, trading ideas, etc., they want assistance.
Nice. Can you, since you mentioned this, is there like 3 typical user behaviors that you've seen over the period of time?
See, I can tell you what I have. Typical would be, yes, like from my past, what I understand is that a user, if he's unhappy, he would either quietly leave, or he would really he would really get irate. But what I've seen change is now people are more patient. They're like, this is how we want it, this is what we want, and fix it. So that love, I think I've seen at INDmoney.
Okay.
And sorry, what was the other question?
Okay, so when he is upset about something, you said that earlier the guy would just quietly leave.
Yeah. I'm saying most other product behaviors. Yeah.
Today he is actually willing out to reach out, have conversations, and have that sort of thing, which is good change.
Which is
because earlier from a tech perspective, you burn a lot of money to acquire a client, and then after that, if he leaves.
I think that comes after a brand reaches a certain level of love with the user.
Yeah.
And then he's like, okay, fine, take your time, but give me this.
Yeah.
So it becomes more feedback. The feedback looping is different.
Right. You mentioned about goals. From a perspective from personal finance, goals are getting more important. People are looking at it. But there are long-term goals. There are now short-term goals. Are you seeing any change in that behavior? Is that adoption gone up or?
Yes, big time. I think, again, if I compare decades and now or even a few years ago, I don't think retiring early was such a theme. But today, if you see most young people, so they don't have aspirational jobs anymore.
Right.
They have an aspirational lifestyle. They want to aspire to retire early, live a certain life after retirement. So that shift we've seen happen with the young.
Right.
They want to invest they want to start early. They are more open to systematic investment. They want to take aggressive calls. So I think that shift has happened when it comes to goal planning. The whole that I want to retire early, focus on lifestyle rather than job. They're happy to work hard. So those kind of shifts I've seen in terms of goals.
So I was looking at some statistic in terms of the average age of India from a perspective. Today is about 72 year living age. And of course, there are people who live till 80, 90. So it's grown every decade. So when India became independent, it was about 48, 50.
Yeah.
That decade, we saw a lot of wars, so it was down. Now, there's another interesting data compared to that with every passing decade, the amount of pre-years of work and post-years of work is changing.
Yes.
So there was a time when people used to start working at 18 because they would do the matriculation exam and that would get you a job. And probably they didn't live beyond 60 much. So the amount of money that is required post 60 was quite less. But every passing decade, the pre-working years are increasing because now boys and girls are not getting jobs before 25. And like you said, that at 55, they probably want to retire, which actually leaves you another, if you're going to live till 80, that's about another 25 years.
Right.
What do they do with that? How do they go about planning?
When goal planning becomes very important. When you have aggressive plans, you need to plan better.
Yeah.
Right. So, and it's pretty doable. Like a lot of people are achieving those goals. I think the trick is planning and also doing asset allocation according to your plan. So if you see that while diversification is a theme that people feel that is a thumb rule to invest. But if your goals are mostly long term, if you need money only after 20 years or 15 years, you can go slightly more aggressive than your risk appetite. So I think the trick is to first understand yourself, which is how much risk you're willing to take, what is your risk appetite, and then accordingly plan your retirement accordingly. So you know that if you're going to retire after 20 years or at 55, you need to start saving X amount today.
Right.
But which is not possible because of your saving limitation. You create a step-up plan that, okay, every year I will increase my savings by this much and then meet the target. Worst case, what will happen? You'll either defer retirement or spend lesser. So
No, that makes a lot of sense, because I personally believe goals gives you exit.
Yeah.
So it's important that if you don't exit, then it is, I mean, the investing is meaningless.
Right.
You don't know when to get out. Otherwise, you'll be perpetually invested. Then probably greed sets in.
Yeah. In fact, the example that I was giving you, that we get user feedback to say that fix it. One of the example was on goals. But so I think people are interested now in setting up these goals, having these milestones, and then saving accordingly.
Right.
Yeah.
So from being an employee now to generating employment for people, can you tell us a little bit about that piece and how that probably has had an impact on your overall perspective to the company, running the company and everything?
Right. So I think it was a big shift for me. Like, I've learned a lot in the last 7 years, which I didn't. In the last 7 years, I would say. In terms of employment and employing people, I think what has shifted or what has changed is that, the whole having work experience or having those 20 years, 15 years is not so relevant anymore.
Okay.
Because the world is changing at such fast pace that now the key factors that matter is adaptability. The key factors that matter is how quickly then can the person learn, what are his specialization, right? Because now more and more jobs require data science, they require ML, AI, all these new age problem solving. So now I think the whole era in when we used to hire earlier to say that experience matters and get experience, I think that has shifted to specialization, adaptability, problem solving, those kind of, I would say, requirements.
So people earlier used to trust gray hair. Now are they trusting the young guys? Is that something which is changing?
Like I said, now that is not a factor anymore, right?
Okay.
If you have gray hairs, but you are all of the others, then absolutely, why not?
Sure. We are now in a situation of geopolitical tension across the world. Every day there's a new news about how does it impact the investor psyche, and do they behave differently during these times, or it's like, no, now they are fixated on their own goals, so they'll continue doing what they're doing?
So if you see markets, especially this time, I think has been very resilient. With the US tariff issues and whatever happening in UAE, I think market has shown resilience. If you see, even in Q2, the S&P 500 has shown 10 plus returns, and the target is also double digit for the year. But if you see market volatility, uncertainty has been a consistent theme. Now I've been looking at markets for almost 20 years plus.
Right.
We've seen so much, right? We've seen the subprime crisis, we've seen COVID, so what we learn is that when these and both these cases that I'm mentioning, whether it's subprime or COVID, market from their peak went down 50%.
Right.
But then they're up 400% also. So I think the trick is to basically not panic sell, because most people exit to control downside. But I would say the trick is to either keep investing more in dips, and then, because the problem is that even if you miss one rebound, your returns look very, very different if you look at historical data.
Sure.
Right. So I think market uncertainty has always been there, whether it's one thing or the other, and it will remain. What the shift that I see in user or is that now there are concentration in certain sectors, right? Because you know that there are certain themes which will play out, like for example, digital investments or so there are concentration in certain themes.
Okay.
But I think in general, the theme remains that you stay invested, don't sell at lows. Over a longer period of times, you will average out, right? And if you are a disciplined investor, you're doing rupee cost averaging, you're buying SIPs, you're buying at dips, then you are a clean winner.
Sure. Have you seen their appetite for products change now? Are they looking at different products or they're still sticking to those traditional products?
Absolutely. I think that's what tech companies have done. So if you see, and what I was telling you, that now products are more accessible.
Yeah.
Earlier, which was only accessible to very few. Like in my olden days, only my very ultra HNI customers would have access to funds which are in US, Singapore based, or even AIFs unlisted. So today the world is open, right? So there's a huge shift in how people are investing, and they understand the value of diversifying over geography, because a lot of young guys have their kids who want to study in the US. They want investments in US so that the dollar appreciation is also added to the return. So I think things have shifted a lot towards these products which are now accessible.
Sure. Yeah, I think that's one of the shift in India. We are seeing adoption of ETF investing also.
Yes.
Because while we don't have fractional yet, we have one unit.
Yeah.
But in terms of it looks like investors want more benchmark oriented returns first to experience and then move to something risky.
Yeah, the FDI's data show that, right?
Yeah.
Like they were net buyers of ETFs and they were selling actively managed, but there was I think almost 1.4 billion inflow by the FDIs into ETFs. So I think passive funds are also gaining traction, especially in the large cap, etc. Passive is the way to go for a lot of young investors.
Market cap investing, you're saying?
Yes, market cap investing. And I think ETFs has also gone innovative on product design.
Right.
Now there are multi and other ETFs available.
Right.
So yeah.
I think the repo products where, because there's so many factors available now.
Right.
So investors do not know which to enter or exit at a point. So you're now starting to see emergence of bundling a product on top of the factor so that the manager then decides. So it's a active play on passive. Yeah. Which I think is now interesting as this world also grows, because the whole debate of active versus passive, such products, when they come in, then it completely changes the perspective.
There's a lot of product innovation, and I think there's more to come.
Is there something which you really like? Like you thought, okay, this was very exciting, something different?
I think the whole quant space can play out much better in our country. There should be a lot of innovation coming there. AI-based algo advisory, I would say.
Now, being one of the early entrants into the fintech space and helping people do their investments and all of it, from a regulatory point of view, how efficient have they been in contribution to this? And if there is something more that you expect?
So I think when it comes to compliance and regulator, you have to inbuild that in your DNA, because otherwise, if you don't, you will scale, but that scalability won't be sustainable.
Right.
So you have to think compliance systems, processes while you scale, and you have to embrace them. We have really embraced all the regulations, and we ensure that that is in place first. So I think, and that's how I think it has to be. So what I feel is that now the regulator, while it's way more proactive, but there is a lot more clarity. You know that, okay, this is how it should be done. And so I feel that's been a change. But again, we'll have to embrace regulation.
This technology keeps shifting very, very quickly. Right. And obviously we have to be in speed with that. Otherwise, But I think that's...
And I think the whole tech in compliance is also going to change things. I think a lot of things in compliance which were laborious and taking a lot of time are now being automated.
Yeah, reg tech.
So that I think is again going to be a game changer.
Great. I think that's a great insight for budding entrepreneurs who want to get into the fintech space. That if we want to build something, do not ignore compliance and regulatory aspect, because that's going to be the backbone on which you will build. Right? Yeah,
otherwise you'll have to shut down.
Forgive me for asking this question, but it's important that we get a woman's perspective on the whole empowerment of women in finance and what's happening. And are there still few things that we have to do in terms of getting more women involved in this industry? What's your take on that?
Well, I think now in finance, I see a lot of women, and that's a good thing. But I don't know what we have to do. I think I can tell you what the women have to do. They have to speak up more for themselves. They have to, I think I see a lot of women who are there, but they don't raise their hands for the jobs because they think they need to be more prepared. I think when it comes to adaptability, emotional quotient, all of that, women have it much better. So I think what the women need to do is raise their hands for more jobs, and take charge.
Through your platform, are you seeing that change happening? And if there are any common mistakes which, if they knew, they can avoid, I think their investment experience would be much better?
So I definitely feel there is a gap there when it comes to managing personal finances. Okay. A lot of women still rely on the man to manage it, and sometimes it's also convenient, but I think one should get involved.
Right.
I have personally done few sessions with the women to basically engage on how to manage personal finances, but that definitely is a gap.
Can tech play a part in?
Tech is already, you see, there are preferential today rates for women when they try to book fixed deposits.
Right.
There are separate products for women to encourage them to invest.
Even home loans,
Even home loans, right? Yeah. So I think there, from a product point of view, there is things happening. Tech, I think when it comes to shopping, women are very tech savvy, right? So they should get on to some of the investment and app itself has a lot of learning modules.
Right.
Like at IND also, we have IND Learn, where you can take very simple quizzes and exams to understand how it works. You guys are doing a great job on educating people. So I think it's more of a personal decision to say that I will take charge. And that's something that I think people are, it's happening, but not at the pace that we would want it to.
Sure. And any emerging trends in the technology space, especially in personal finance, which is, you feel that, okay, this is going to be the next phase which will drive the next.
There's so many emerging trends, right? In when it comes to tech and personal finance, or even in general fintech, that it's very, very difficult to catch up. The issue is that it's happening very, very fast.
Right.
So you have to catch up. So if you look at it from a lending point of view, also there are almost 70% underwriting is now automated. You have data science models, you have a lot of income estimation, various models which have really solved a lot of effort that a human was putting earlier. When it comes to investing, again, there are these brilliant AI generated content which helps you decide whether it's trading, whether it's investing. Gen AI or generative AI is helping there. And then the next big thing will be agentic. But in terms of innovation, automation, compliance, automation, so many things, there's a lot of innovation happening.
Sure.
The trick is you have to catch up and you have to be fast, execute
action.
Fast.
Yeah. And start somewhere. Right.
Start somewhere nahi kiya abhi tak, to then you're dead. But now you have to make sure that you're at par with the speed.
I remember going to some expo where there were a couple of young investors, and they were talking to a couple of different broking outfits. And the only question they were asking is, would you be faster than the other guy? Then I will open an account here. I think that is something which is playing out in the younger generation.
With us in tech, latency is a very, very big issue. If you are latent, then you're dead. So that's why if you see on IND also, we really are obsessive about speed when it comes to app.
Yeah. So Amrita, is there any book that you've read has an impact on your life and in investing? If you want to share that with the audience.
Well, there are so many books that I've read, but Abhi, I've just started reading How Prime Ministers Decide, which is written by one of my clients at HSBC. So that's what I'm reading right now.
How Prime Ministers Decide.
Yeah.
Oh, that's going to be interesting.
Yeah.
Okay. Any movie, any web series that you... Okay, is there a movie you, like, if you don't have anything in the world, then let me watch that? You've watched many times.
Yeah, I don't think I'm going to answer that. Honestly, पहले घर देखो, फिर काम देखो, फिर बच्चा देखो, उसके बाद movie जो दिख रही होती है देख लेते हैं.
Finally, say for a budding entrepreneur who wants to come into this industry, maybe start something, or if you were starting today, what were the maybe 3 tips for them that, okay, this is something which you should explore first and then move ahead?
Okay. So I think for someone who's starting now, I think a few things that I would take care of is one that I don't think that era where you would just throw money to acquire user and not care about unit economics and profitability. That era is over. You know, you can't just acquire at the cost of anything.
Right.
I think that is something which has really changed also because fundraising has become difficult if you don't take care of profitability. The other thing I would say is what we discussed earlier, that you have to think regulation, compliance, and build that in the DNA while you're building so that your business is sustainable and you're not getting shocks later. Yeah, the third thing I would say will be that you cannot have a subpar product because your user will churn. So focus on product. Yeah.
Sure. Amrita, thank you so much.
Thank you
for joining us
today.
Thank you
for having me.
And wonderful insights. And I think especially the last one where I think anybody watching this would take that as a homework that, okay, if I'm going to do this, then this is what Amrita said on this podcast.
Okay.
Thank you.
Thank you.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.